If you would like to earn CPE credit for listening to the show, visit earmarkcpe.com/FPA. Download the app, take a short quiz, and get your CPE certificate. Finally, if you enjoy listening to FP&A Today, please go to your podcast platform of choice, click the subscribe button, and leave a rating and review of the show. And now, on to the show.
From Data Rails, this is FP&A Today.
Welcome to FP&A Today. I'm your host, Glenn Hopper. Our guest today is Seth Zimmerman. Seth is maybe a little outside of the mold of many of our guests on this podcast. He started his career in public accounting and quickly moved into finance and accounting leadership roles in the real estate industry. In the interim, he became a really good financial modeler and is someone who I personally went to when I had Excel questions over the years. He is an experienced finance and accounting executive with a 25-year track record of building high-performance finance organizations, implementing new technologies, and advising on strategic transactions. Seth is currently the CFO at Invest with Roots and has held leadership positions at multiple real estate and property firms. He is a CPA whose expertise spans financial data analysis, organization restructuring, and initial public offerings. Seth, welcome to the show.
Thanks. Really glad to be here.
Yeah, so I'm going to go ahead and just get this out at the beginning of the show. Seth and I have known each other since about 1944. I think we met in the war, I think.
That's right.
Actually, it was 8th grade, right?
It was ninth grade. Yeah.
Ninth grade. Okay. Yeah. Yeah. So, which was not much later than 1944, I don't think.
It feels that way now, doesn't it?
Yeah. I'm excited to have you on because I love, you're someone I've talked to over the years. Whenever I had a tough Excel question, you were one of the people that was in my Rolodex that I would call on. And so I know, as a great modeler, you've got a lot to add here, but also I don't know that we've had a guest from the real estate industry before. Okay. And I'm looking forward to diving into talking about real estate in more detail. But I also, you were telling me a little bit about the company that you just joined, Invest with Roots. And it's a very novel concept. So I wonder if you wouldn't just take a minute and tell us about Invest with Roots and what you're doing there and what you guys do.
Yeah, so we are a startup REIT. It's been around for a couple of years. We have raised so far a total of about $32 million and growing every day. We're a Reg A REIT, so we are an SEC filer, but only twice a year. And the concept of our business is, obviously we're a for-profit business, but we, the founders really wanted to try and find a way to have an impact on the lives of the residents who live in our apartments and our single-family houses. And so what we do is when somebody moves into one of our houses, we have a program called Live in It Like You Own It. And basically, at the end of every quarter, we ask the residents to take a directed video. So we tell them exactly what to do with their house, and we could look at it and see if there's anything that needs to be fixed or cleaned up, anything like that. And then they also have to be current on their rent at the end of the quarter. If they do those two things, then we will give them $50 per month in a rebate on their rent. And they have two options. One is either to invest it into our REIT, and the second is a high yield savings option. And people have been really happy. Residents have been really happy investing in the REIT. They've had nice returns. I should back up. They can also, we treat security deposits as a fee. And so those are allowed to be invested in our REIT also, which is, obviously the big chunk that they can put in at one time. So people love it. Residents are sticky because they get this opportunity. So we think that our retention is a lot better than, your typical landlord. And, it's good for everybody. And the city, we're only in Atlanta right now. The city of Atlanta loves it and is, wants to work with us on low-income housing grants and things. So it's been great.
God, what a great concept. And so are all the REIT investors, is it exclusively the residents, or are others also investing?
Others are
non-residents.
We have accredited investors who have put in, a couple of $1 million into the REIT, and you only have to put in $1 million to start. $100 to start.
Big difference there, right?
Yes, yeah, a little bit. Well, maybe for you.
Yeah.
Um, but yeah, you only have to put in $100 to start. The transaction fees are very low. And so, it's a great way for somebody to sort of get into real estate investing without having the risk of just buying one house or, one small apartment complex or something. So the vast majority of the investments are from, your regular investors or accredited investors. But I think we have a total of about $800,000 of value that's been created for the residents. So it's significant. I mean, we only have 150 units right now. So, considering, and probably, 80% of those residents participate in the program. So
Wow.
we've really, we feel we've done right by them, and they like living with us. So it's good.
Super cool concept. And I know you've been in real estate forever, but this is a different approach to that. So let's go back in your career. Walk me through, because I know you started out as a CPA in public accounting. Walk me through your early career and some of the milestones that got you into real estate and brought you to where you are now.
So, like you said, I worked for Ernst & Young for 6 years in their corporate tax group. Started out preparing tax returns, ended that period working on research and development tax credits, which was fun, but it was a little bit too much of a niche for me. And I wanted to get out and be able to kind of be, the big picture guy at the company rather than coming in and doing some really detailed thing that doesn't involve looking at kind of the whole company. So when I left Ernst & Young, I went to work for Singular Wireless in their accounting group briefly, kind of was transitioned out of the tax side and transitioned into accounting. And then after I was with Singular for a couple of years, an opportunity came along with an affiliate of Lehman Brothers private equity real estate that was based here in Atlanta. And Lehman outsourced the asset management for all their private equity real estate funds to the group that I was working for. So I started there in 2004 and worked through 2012. So the bankruptcy was right in the middle of the time I was there. And that was interesting to go through, to say the least. We had just raised a big fund, and we couldn't deploy the money anymore, and just kind of went to winding things down. But yeah, so then in 2012, I left there and went to work for a pretty large apartment developer here in Atlanta, and have worked for a few apartment developers since then, and just really enjoy it. Love real estate, and it's been 20 years or something. So.
Yeah, and I definitely want to talk about the Lehman Brothers. It was actually on my list of questions earlier, but since you mentioned it, maybe let's go ahead and dive into Lehman Brothers, because I mean, you were one of the most directly impacted, and the fact that you were able to hang on until 2012 with the collapse there. Walk me through as it was all happening and when you knew you were in trouble, and what kind of walk us through that time period.
Sure.
Because it's also fun that we love hearing about financial collapse on FP&A today.
I wish I could work at Enron also, but
yeah.
Actually I don't. I remember, just like everybody else, knowing that there's the government had started creating all these programs to try and save some of the banks, and it's hard to remember back, but banks were going under left and right. I will never forget that I was out doing a lemonade stand with my kids in my neighborhood I think it was a Saturday afternoon, and my boss calls. He's calling the whole group, like, get into the office right now. Still didn't really know what was going on. We knew once we got to the office that there was a possibility that something big was going to happen, and we spent 2 days just going through every document that was associated with any of our deals to see what the bankruptcy provisions were. And fortunately, we were less affected. The private equity side was less affected because the investment is mostly third parties coming. It wasn't Lehman's money. So Lehman was a general partner, and they obviously weren't investing any more money, but they were still running things. Anyway, on that night, I don't remember the exact date, but that night we just get a call from our New York office. A guy in New York was like, well, it's done. we're bankrupt. And everybody in the office was like, what? What's going on here? Should we come to work tomorrow? It was terrifying. And, fortunately for my group, we did get to hang on for, 4 or 5 more years. And after that, Lehman spun out the management of the funds to a group that's still around today and actually still managing. Those funds have a few assets left in them. And they're still managing those, trying to sell them and close down the funds. And in fact, I went back to work there for a couple of years right at the beginning of the pandemic to try and help sell off the biggest asset they still had in the fund, which was a trophy office building in New York.
Being directly impacted by Lehman Brothers that had to be a very tough time in your career. But you've had some other, we were joking about Enron, but you've had some other situations in your career that had to be, when you came into the profession, weren't exactly the kind of things you were planning for. I know maybe in a couple of them where we can't say names here, but as tell me a little bit about, and we've talked about them before, but tell me about some other experiences you've had in financial leadership positions in tough times.
Yeah, sure. So I've learned a lot about people, I'd say, in my career. And one of the things that I've learned is that when it comes to money, you never know what somebody's going to do. A few years ago, went to work for a startup. It was a real estate business that had significant financing to buy multifamily properties. And also, we did a Series A round into our management company for $10 million. It was from a large real estate-like investor. And unfortunately, the CEO, the day after the Series A round, transferred $1 million into his personal bank account. And obviously, as the CFO of the company, that was, I almost had a stroke. And,
Right.
it was really uncomfortable, and eventually had to force him to out himself to the investor. And the company does not exist anymore. So it was, really sad. I mean, that we had a large staff and things were looking like they were going to, be successful. And then you got to have somebody that just can't help themselves. So,
yeah, what a tough spot as the CFO. I mean, I wonder, it takes, I don't know, maybe I'm underestimating what most people would do, but you're in this role, you are the steward of that company's finances, we're there to maximize return for investors. And when you see something like that happen, even if it's just mismanagement, I mean, I wonder, it sounds like there was no part of you that was just like, well, we'll figure out how to call this a bonus or whatever. I mean, you immediately
it was as simple. It was as simple as reading the LLC agreement. Truly, like that was the first thing I did, was go dig up the LLC agreement, and it was very clear that if any money goes out of the company for any type of investment or whatever, somebody would take money out for, that the investor was to know about it, and the person who took the money didn't seem to have any intent to let them know about it. So that kind of put me in a really tough spot.
Yeah, I could imagine. And it's,
I didn't want my reputation tarnished by something that he did. So, I wasn't going to go along to get along.
Yeah. Yeah. And I think about, I mean, that's a private company, but I think, all the Sarbanes-Oxley and all the post-Enron stuff. And I mean, and it's like, you are the CFO, you are the gatekeeper on the finances there. So there's really nothing else you could have done in that situation, or without getting dragged into it yourself, I guess.
Right.
And was there another story about another situation you went through?
Yeah, I'm probably very unusual in that I've encountered this a couple times in my career. So there was one when I was working for the Lehman Brothers affiliate, where we were building a condo in a city that's not to be named, and we had a local developer partner. We were just the LP cash, and the local developer partner, just like the guy at the other company, just absconded with a bunch of cash. The funny thing is, he actually booked it correctly. I mean, he was booking credit to cash and a due from affiliate. So eventually, that just built up to be millions of dollars, and start looking at it. Where did that money go? And so fortunately, that was a very large amount of money. That was, I think, $12 million. So that was a lot larger than the other one. And he did end up going to prison for a year and came back out and got back into the real estate game. And as far as
Of
I know,
course.
yeah, I mean, yeah, as far as I know, he's still at it. So
Wow. Yeah.
crazy times.
I think about why people go into finance and accounting, thinking of a job where it should just be so black and white. And like I said, I've known Seth for years, and Seth, tell me if you remember this. Years ago, you told me nothing. We'll see if you remember this. I do, because it was one of the nerdiest things I've ever heard. You said nothing made you happier than when your T accounts balanced.
I love my T accounts, man. Those things are the best.
So I think about what you're drawn to and how you want to spend your time, and you're being embroiled in all this, just drama and fraud and everything else.
Draining. That's kind of how I refer to it.
Yeah. I feel like you'd much rather just be staring at your spreadsheet,
very
going
much
through
so.
models and
like writing a big long formula and making that, that'll make my day or something.
Yeah.
I don't want to be a police officer or psychologist or anything like that, but sometimes you get stuck.
So, I mean, and I know you were a Spanish major in undergrad.
I was.
So I'm wondering what led you to accounting to begin with, and everything that you've been through in your accounting career, the first reason you came to it, and maybe, and I'm going to use this word, and I think literally or accurately at least, your passion for the profession. How has it evolved over 25 years? And the only reason I say passion works there is because you're still excited about the T accounts. So
I do love what I do. What led me to go into it is actually kind of random. When I was an undergrad, I had two roommates, and they were both accounting majors, and I was an aimless youth. But my roommates had, gotten great jobs with their accounting degrees, and they were doing well. And after I graduated, I kind of thought, okay, well, I need to do something besides Spanish. Speaking Spanish doesn't make you a lot of money, so they had been successful. So I decided, okay, well, I'll check out accounting, and I decided to go back. And it was almost like, fortunately, I loved it because I didn't really have a fallback plan. So, but it was a great move, and I'm really happy that I did it. And then, as far as the career, it's just the thing that I've loved about it is probably true in other places. What I know is real estate is that, every deal that we do is different. Everything that we do from a finance standpoint, it just depends on the deal and the types of investors that you're going to have in it. And so I find that really interesting. I don't think that I would like making widgets or being, doing finances for or a company, manufacturing company. I just love being able to touch the assets, being able to, know that they're real things that are being used by people for their shelter. And, so that's kind of essential to people's lives. And so I've loved that, and just continue to learn, coming to work here. We're a REIT, and I've never worked on REITs before. So I've had a lot to learn, taken a lot of classes, and just will continue to do that as we grow, just try to make myself into a REIT expert, which is always fun.
Thinking about you as you answered that, you mentioned when you were at E&Y that you'd gotten into this really specialized niche division of doing the R&D tax credits. And then now, as you've taken on leadership roles and being a CFO, sounds like it's much more in your wheelhouse of like not wanting to just be so laser focused and having this broad experience. But you do, the CPA and the accounting side coming up is, that's more of the traditional background for coming into a CFO position. Coming up a lot of times, through CPA and audit and all that. But so I'm thinking, as you moved into leadership with that tight accounting background, tell me about the transition because I know you're a big modeler and you've had to in the nature of the work that you do.
Mhm.
But how was that transition from accounting into sort of bringing in also the finance, the budgeting, the FP&A, and that side of it?
It was new. I mean, that's for sure. It definitely took a while. Working for doing asset management for the Lehman funds, you learn what the LP, the large investor in a deal wants and what they're looking for. But you go to work for a local guy that the Lehmans of the world invest in, and it's a whole different set of incentives. They're in a lot of ways, dependent on fees for their income. And, whereas at the fund level, we did have fees, but the idea was, the investing was going to, save or not save us, but that's your bread and butter. That's all you really care about is the returns on the investment. Become a lot more sensitive to fees going to work for a developer. I mean, they have to keep the lights on. They got to keep the people, out at the site. So it's just a whole separate kind of group of challenges. There's things that I had no idea even, I couldn't have told you what a superintendent was and a job trailer or anything like that when before I went to work with a local developer. It was really fun sort of getting to go to job sites where the development was underway. And it was just very motivating to be able to do that sort of thing. And know that you're part of, putting a deal together to, eventually you'll see new apartment community or, a high rise or something. It's very rewarding.
FP&A Today is brought to you by DataRails, the world's #1 FP&A solution. DataRails is the artificial intelligence-powered financial planning and analysis platform built for Excel users. That's right, you can stay in Excel. But instead of facing hell for every budget, month-end close, or forecast, you can enjoy a paradise of data consolidation, advanced visualization, reporting, and AI capabilities. Plus game-changing insights giving you instant answers and your story created in seconds. Find out why more than 1,000 finance teams use DataRails to uncover their company's real story. Don't replace Excel, embrace Excel. Learn more at datarails.com. Coming up in the development side, now being at a REIT and thinking about the kinds of reporting that you've had to do. So how does the real estate industry, how does their financial reporting differ from other sectors you've worked in? I guess, maybe encompass in that what kind of metrics are important, what are you tracking, and also part of that, who are the primary beneficiaries? And maybe I should break this into 3 questions, but it's how it's different, what you're tracking, and who you're reporting to in all of these projects.
Sure. How it's different, I would say, is that every investment is discrete, is different. There's never a time when it's just cookie cutter. Whereas that's kind of picking on manufacturing earlier, but if you're cranking out the same product 24 hours a day, I think your reporting can be sort of probably better standardized. Whereas the reporting for real estate, it just differs based on the product type, and there's a lot of common things that people look for in terms of returns. The big 3 would be IRR, multiple of capital, and profit. Like that's at the end of the day what everybody cares about, and that's what the point of doing all the models is to figure out. So I think in that way, it's the fact that every deal is different, and you have to look at them individually rather than just a group of things that are where the same thing is being produced over and over again. I think hopefully that answers the first part of the question.
Yep.
And tell me this, I'm terrible with the stuff. So,
I threw 11 questions at you all wrapped into one. So the next part is what are the key metrics? But I think you kind of hit on those too with IRR.
There's different ones actually for REITs. And that's one of the things that I'm working on here is as I said, we're very small, but we need to be able to kind of benchmark ourselves against the public REITs and, just know kind of what direction, the overall market is going in, and to help us report. I think as we grow and get more sophisticated investors, they'll definitely be asking for the more, robust type of reporting. So we're switching accounting systems, and that's a real focus is the reporting piece of it.
Gotcha. And right now, are you dealing with like a lot of Excel data? Where's your data living these days?
It lives in QuickBooks, unfortunately.
Yeah.
So, and for real estate is there's always tons of entities involved. So, to buy one apartment community, there might be, 5 or 6 different LLCs involved. So, and QuickBooks is horrible at that. So that's why we're switching to a new accounting system, and we'll be able to do the type of, reporting that we need. It's hard to do like earnings per share in the accounting system now and all that sort of stuff. So we'll have the capability to do kind of the traditional metrics and, for the public
Yeah.
company.
Outside of property management, so much of what you do in real estate, it's the real metrics are when there's a transaction. And so ongoing, like tracking monthly, quarterly metrics. I mean, are there things you're tracking monthly and
There are. I mean, you're tracking performance. You've underwritten the deal, so not necessarily always on a monthly underwriting basis. Sometimes annual, but you do want to make sure that your metrics. I think typically your NOI should be 65% of your gross revenue, and that. So you just always want to kind of be checking those things and making sure that also you've got a budget, obviously, so making sure that nothing is really going wrong. At the end of the day, those are relatively small parts of the life cycle of the deal. And so it's really, the acquisition, any capital event like a refinancing, and ultimately, a sale of the property are what takes the most time or the most brain power to get them right.
in real estate, how much is the industry on the whole leaning into like data-driven decision making? Is it? I'm thinking about where you're selecting the location and how much of that is data backed versus I'm a developer, I've been doing this for X number of decades and I know this is a good. I mean, how or determining pricing and all that. Are you using data a lot?
Probably not as much as other industries, because you do have a lot of developers who've been around forever, and they know where they want to be. They want to be suburban garden style apartments in the path of growth and that sort of thing. But there are some great services that have been around for a while, but just becoming much more sophisticated with AI that you can we use to find sites, to compare, look at sales comps, kind of discover demographics, just all that sort of stuff. And it's just becoming, more sophisticated all the time. Some people use it. Some firms, the owner wants to use their own intuition. And, many times they're great at that. And other times, you can't win them all. So, but there's a lot of people who are really good at that out there. So, and when you trust yourself that much, it's, why should I bring in this $1 million technology? So, kind of, it's both, I'd say.
I guess the other thing that, and you mentioned earlier that how many different investors there are when you're just because of the cost of building out these properties. In the limited exposure I've had with working with real estate developers, it seemed like IR, investor relations, is a big part of what you do because there's, you've got to do your quarterly reporting to the investors on this. Is that, have you done a lot of IR work? Is that a big part of being a CFO in a real estate company?
More with my last stint with the Lehman team. I was very involved in like quarterly valuations and putting together the investor report for the end of each quarter. And so there were always tons of questions about that stuff, making sure your website's updated, the stats that you're showing there are correct, your overall returns, your track record, all that sort of stuff. But then there's the real deep investor relations that is, I find it very interesting and, understanding what different investors' motivations are for the investment and, that they can be different. And you kind of have to take that into consideration when you're talking to, you have pension funds, you have individual, they just all have their own, unique sets of challenges, things they want, reports that you got to create for them, that sort of thing.
In the startup world, and this is as someone who spent the bulk of my career in the startup world, are you just thinking about all these, whether it's an IR report or the management reporting and tracking all the metrics, how, you got to be in like roll up your sleeve mode. Are you really deep into, are you still doing a lot of modeling and a lot of work in Excel and just down there in the weeds?
Yeah, especially at this company, it started out as single family residential. And so we have a couple of guys that are great at that and they're great at finding houses. But to scale as a REIT is difficult when you're out buying one house or five houses, and that sort of thing. So we're starting to get into the multifamily space, and I'm doing quite a bit of the modeling for that, just because no one here has the experience. But I'm trying real hard to transfer that knowledge to somebody else. So it's fun, but like it takes away from other stuff that I need to do that's more important. Well, not that
Yeah, it's hard.
modeling, not that modeling is not important, but other stuff that a CFO would typically do.
Yeah, that's always the problem, the balance of it's hard to make the battle plan from inside the foxhole, right? Like
Yes.
you're really seeing everything up close, up front, and then to be able to then the switching cost of just pulling out of that and
Yeah.
focusing on making a strategic decision is tough. So yeah, but you got to. I mean, that's part of the thing with
Yeah.
startup. You set it up, you build your team, and you've had. I think we talked about this just for a minute before the show. You've built teams before in your
Mhm.
leadership roles, and now in the startup, especially as you guys are looking to scale up. Do you have some kind of golden rules or your approach to putting the right people in the right seats, and just knowing that startup world, you're building the airplane while you're flying. So do
Mhm.
you, as you're thinking about the team that you're going to build there and leaning on some of what you've done historically, what can you tell me about that?
One of the things that I really like about the startup world is that good people are highly attracted to it, and so you can really, it's if you can find people, because it's hard for anybody to find people these days, because you're able to offer stock incentives, hopefully set people up for an exit. It's easier to find good people. And so what I usually look for is just somebody who could teach me to do their job. I don't want to be always the one telling people, okay, we need this, we need that. I want somebody to come to me. I'm looking for proactive people and, people who are smart and have the background. I feel like once you find somebody kind of with those traits, then, if they're self-motivated, I just let them go to town and kind of keep me updated on what they're doing. And I can kind of give them guidance and make sure that, they don't go off on some wild tangent. But that part's great. I love to learn, and you can always learn the new kids coming out of school, or I love calling them kids. Uh,
Yeah.
kind of.
I think I referred to someone who was like 42 the other day as a kid. I'm instantly my granddad. I have no idea what's going on, but
When, so we're getting old, man.
That brings up something else you and I were talking about, mentioning the kids coming straight out of school and into a startup. Right now, there is, I'm sure you've seen the news. I mean, there's a real shortage of people coming into accounting right now. And so I'm a big tech guy. So I'm convinced that AI is going to fix all this, and all the seats that we're not filling with actual accountants, we're going to put robo accountants in there. But as someone who didn't start out your education, but then switched at the master's level to go into accounting, and just in some of the people you're talking to and hiring now, what do you think's causing the drying up of the well of people coming into accounting?
I suspect it's a combination of the fact that nobody likes accounting, and yeah, uh, and there's just so many more opportunities these days than there were when we were coming up to be in the finance world, and that are higher starting pay out of school, significantly higher. So that's attractive to people. Uh, and I think it's really unfortunate that accounting has it's become very difficult to find people. But I was saying earlier, like it's going to have to turn. I mean, we have to have accountants. So at some point, the industry is going to have to catch up in terms of compensation and incentives for people to start going back in. So it'll happen. Everybody is going to have to be miserable for a couple of years. So.
Yeah. As miserable as an auditor who's fresh out of school and working.
Yes, exactly. Exactly.
This has all been great stuff. It's been fascinating to hear about the real estate industry. And since we've known each other a while, I have some answers to this question, but I am going to move to the our personal segment of the show where we learn a little bit about you. I won't go back and tell high school stories about you, but what's something that most people don't know about you that they couldn't find on your LinkedIn profile or whatever?
I love to ride motorcycles. I've had a motorcycle. My first one was right after I got married. Shockingly, my wife was okay with me buying a motorcycle. I had life insurance, so
Yeah.
it was all good. So I pretty much had one consistently for 25 years. I do have one sitting in my garage right now that I haven't ridden in a couple of years because I crashed it, and it was a horrible experience.
Oh,
Yeah, it was not a lot
yeah.
of
I'm
fun.
laughing. You're talking about a motorcycle wreck, and I'm just
Right.
laughing. I don't know what. Yeah. It's quick story on the wreck, or
Yeah, sure. So I was riding up in the North Georgia mountains one Saturday afternoon, and it was I was behind a motorcycle, which was then behind a car, and the motorcycle in front of me decided to pass the car. We were on a straightaway in the mountains, and I thought, okay, well, he passed him. There must be plenty of room for me to pass him, and so I sped up and then ran out of straightaway. Just the road curved, and I was going way too fast to make the turn and laid it down. And I'll never forget hearing my head hit the ground. I was just like, oh my god, thank God I have this helmet on. And yeah, I mean, I had all the gear on, thankfully, or I just would have been road rash like crazy.
yeah. So how did you break anything? How did you walk away from that?
Barely. It was tough to walk after that. So walking away was a challenge, but I was in pain for a couple of weeks, really bad, and I'm still carrying like a small tear in my rotator cuff. It's like too small for surgery, and it's kind of one of those things you can live with. So.
Yeah. So now you still have the motorcycle. They're just decorative items at this point?
Have been for a while. I gotta get a new battery for it, and I'll get it out there at some point. Just gotta.
So the story about motorcycle riders is there's two kinds. There's the people who've crashed and the people who haven't crashed yet. So now you're on the other side of that. So
I figure I'll cut the odds. I'm not going to crash again. So I can act like a crazy person out there, and it's not going to happen.
The crazy accountant on a motorcycle. I don't know. That sounds like a premise for a movie, maybe. I don't.
Yeah, it's a fantasy movie for sure.
Yeah.
No crazy accountants on motorcycles. So.
All right. And one we have to ask everyone as well. And I say I'm always interested. I think I already know what you're going to say, but what is your favorite Excel function and why?
So it's not really a function. I don't know what you call it, but I learned Power Query last year. And first of all, it was fascinating to learn. I never even really thought about cleaning up data and that sort of stuff before. And where I was working at the time, we had a need for doing that. The GL information we could get out of our accounting system was just not easy to work with unless you really manipulated it. And so I discovered the fact that you could go in and you can manipulate it one time, and you never have to mess with it again. You just can keep saving a file in the same folder, and it keeps doing the same thing for you, cleaning it up. Saved me so much time and really helpful with reporting. You can do pivot tables off of multiple, different tables and sort of a database function. And there's just so many positive things about it that help with reporting and that sort of thing. So I love that.
So very cool. And I guess my first question is, why do you hate index match? And you're supposed to say index match or XLOOKUP or something.
Yeah, it's good. It's a good function for those who like it.
Yeah. No, I think
I don't have anything against it. So.
Yeah. And Power Query is great. I think, and honestly, I'm pretty excited. We're not there yet. It's kind of a dud right now, but seeing where Microsoft goes with Copilot built into Excel, I think we're going to start seeing a lot of that kind of functionality that is just something that you're speaking to it in natural language and saying what you want to do. And all these, page-long formulas that you're using are going to go away. And it's just going to be a completely different way to interact with your data. So I don't know, we're far from it now. I don't know if you've even messed with Copilot yet, but Power Query is awesome.
I've tried to mess with it once or twice, but it wasn't at the point where it could really give me answers about what I was looking for. So, but I think it's going to be really cool when they get it kind of mature.
Yeah. And it's, I guess this week is the big Microsoft Build conference. So they're probably, while we're recording this, they're probably announcing the next cool Excel thing that we'll have to find out about later. So.
Right.
Yeah. Well, Seth, I really appreciate you coming on the show. How can, if listeners want to learn more about motorcycles and real estate, how can they connect with you?
I'm on LinkedIn, Seth A. Zimmerman. You can go to investwithroots.com, find out all about us, and you can invest for as little as $100. So we're always interested in getting new people. And so if that's your thing, please come in and invest with us.
All right,
Good
Seth,
luck.
thanks for being on the show. Yeah.
Cool. Well, yeah, I appreciate you having me. It's been great.